So that, Sam, is the absolute secret to trading. There's no question about it. And I hope everybody listening in here during this little preamble before I got going appreciated that, because you can take that Monday and guarantee you'll make money from that right out of the gates. Everyone enjoy that little talk? You guys can't be fooled, can you? You guys are good. Pretty sharp for Saturday morning. Good morning, everybody. Welcome to Saturday Morning Coffee at DTS. Coffee with Paul. It's been called both. Same thing. They're not two different events. Sound good? We're talking? All right. Yes, the Saturday morning coffees are recorded. They tend to end up being some good topics, and everybody seems to like them. So they are recorded. So sometime during the week, look for that to be out there. As usual, if you don't want to keep checking the site, if you subscribe at YouTube, you'll get a notification when something comes out on YouTube, and then at the same time it's on YouTube, it's on the DTS site. So let's get forward going for this morning, so we can all get out of here at 9:30, 9:45 or so. I do this when we have some free Saturdays in between seminar days and that type of thing, and it's just been a popular thing. Here's the goal of it. Got the right date there. Today is April 9th. Exception where I don't have a topic chosen, but I do all the events on Wednesday, the special events, which are typically Wednesday. They've been Wednesday for a long, long time, maybe forever. When I do those, I have a very full agenda, and I try to get done within that hour so nobody's here more than an hour. And I don't really leave a lot of time or the opportunity for a lot of questions outside the topic of what I'm talking about. So I thought this is the primary goal for this, is to just sit back and chill and have any questions that you want to do. So that's one of the big goals for today is to do that. Here is the whole agenda for today. So to the extent that you guys have some questions, you can start right now, or while I'm waiting for questions, I have a couple topics I'll go over. I have three quick things to go over. Just a quick rundown of the calendar for this week, but of course you can all figure that out yourself. A topic called It's Not the Top, It's Not the Bottom, it's about stock picking, and then a topic about perfection. These are just quick little topics, not whole presentations, obviously. So you feel free in the meantime. Here's what's coming up this month. The 11th is the biweekly scanning night. There'll also be one the 25th, 2 weeks from then. That's why it's biweekly. The 13th, that'll be Wednesday. I'm doing an event called Moment in Time 2. I have a slide on that next, so I'll wait till I get to that. Good Friday, the market is closed, I believe, and so that's going to be a 3-day holiday. 22nd starts is the Introduction to Mastering Technical Analysis class. That's a half-day class everyone's invited to. If you've never been there, I suggest you be there. It's just some good education on topics that are kind of part and also, alongside the seminar program. In the seminar program, I teach all technical analysis, so these are a lot of the topics that are less technical. And then this next 3 Saturdays in a row, of course, start the seminar program for those who are interested in the seminar program. How do you choose a strike price for SPY puts? It's kind of a wild guess in a sense, and depends on your goal, obviously, Mike. I think you're part of the options class when I do it, but the obviously depends on your goal and what you're trying to do, and these are more home run type of things. So what I went out and did was I projected what I would consider to be something above a maximum, really bad initial drop. And then figuring if it got there in less than half the time, the puts would be worth triple, quadruple, whatever. If we got there very quickly or went beyond that, could be 10 times, who knows. So they're kind of what you don't normally ever do, but as part of the whole portfolio, it's something I want very much in there. Not to mention the fact, who knows what you could wake up to one of these mornings. And like I always say, once when things start, if they do, it's very hard to catch up with them. So if you look at the chart, that would be a big but reasonable drop is the way I would phrase it. There's some areas there. So if we can get there faster than 7 months, it'll make some money. Another question here, why the bear market can be biggest because of the monthly chart? Yeah, Tony, I will do a whole thing on this in the near future. I have to time what I do, Tony, for free events very carefully because, you're all big boys and girls here, and I think you understand a couple of things. When I do the weekly market summary, which is a free letter that goes out, or when I talk about free events and, a topic comes up on, the market or this or that, and, I don't try to hold stuff back, but everybody has to understand. I think you do understand that there's a difference, and I'm concerned if I were to make a comment today that, oh, the market is blah, and somebody heard that and then they act on it and then they don't tune in to me again for 6 months or the next free event or whatever. Well, I could change my mind. So things happen, and chart reading is about reading every next bar that forms, whether you're on a 1 minute chart or a monthly chart, it doesn't matter. And things can change very quickly, right? Everybody makes sense. Everybody understand that it can change. And people have subscribed to things. Obviously, I'm updating it constantly on what I think market view is in stocks and picks, and that's what we do. And that's not for everybody. And I don't. You've never, true or false, you've never ever heard me say, "Oh, if you want the answer to that, sign up for something." Right? Is that true? 4.5 years, 5 years. You've never heard me say that, right? Never. But you also have to understand that I can't sit here and pretend to give the advice that would be to a subscriber, because what if it changes tomorrow? I mean, what, you're just going to do the wrong thing for the next 3 months, then yell at me and blame me, and I'll say, wait a minute, we did a 180 back there in April. So I'm going to have I already have the titles and I have a lot of material for it, Tony. It's going to be called, what's it going to be called? Oh, the market part one, how did we get here? And the market part two, where are we going? I just don't want to put it out there at a point where the timing would be such that you can't react to what I say anymore, if that makes any sense. But a big part of it will be that, yeah, if you take a look at the rally and decline of 2001, 2008, if you just go back and you just skew your charts back so that current time is 2004 or whatever, the decline was incredible. You go to a monthly chart now and find that decline, you can't even see it. It's a little bump. It's a little P on the side of the hill. It's rather incredible. But I have a whole list of things that I believe that to be the case, and whether or not we've started or not is not clear yet. But you have to assume any short-term top at this point could be a big-term top, long-term top. I'm still working on a moment in time from last time, really, before 90. Yeah, Davis. Well, here, let me get to that slide next. We're out of questions. So there's a schedule coming up. Just a quick word for Wednesday. Moment in time too. The reason there was one called a moment in time, and Davis, you're very in tune with all of the free stuff out there, because it was, I think, 3 years ago already. It's been a long time ago. And I'm doing this one as kind of a new presentation. It'll, of course, cover the concepts, but maybe go into a little more detail about it. And the reason is because I get people all the time who send me things, whether it's trade ideas or this or that. And whenever I talk about a moment in time, which is what I would call my style of trading, if you will. And since I coined the term, I get to define it. And people send me things they call a moment in time, and they're just, laughably bad, poor, you're just not getting the concept, which I look at as my fault. I didn't explain it well enough. But it's something that the first step in understanding a moment in time is just great technical understanding. I mean, that's just part of it. So a lot of people will never really get it because you don't have the background to understand it. And it's a fuzzy topic to understand, I think, in some ways. But so anyways, there's going to be a lot of examples, and a couple of the slides will be taken from the first one, because I went to redo the slides and define it, and I put some stuff down, and I was thinking, well, what did I say the first time? And I was like, boy, that was really good what I said the first time. I'm glad I wouldn't look, because I might have forgot some of that. So anyways, that'll be coming up on Wednesday, and of course you'll get invites for that as always. It is the whole point, Davis. It is, exactly. All right, so there's a moment of time, there's schedule, boom, boom, boom. And then Friday, April 22nd is the beginning of the next Introduction to Mastering Technical Analysis class. Boom, there we go. All right. Again, today you are supposed to interrupt with questions, so just, if you got a question, just throw it out there. I'll finish my thought, and then I'll get to your question. So I'm just filling in time in between questions, so to speak. It's not the top, it's the bottom, it's stock picks. Now, what I teach, as can be applied to Forex. I have Forex traders that took the seminar program, and they're doing Forex. I have some doing futures. Glenn, right? Glenn's here. I saw him say hi. Glenn, you're a futures trader, right? And you went through the seminar program so many times that you could have taught the class, right? I remember last times you were there, you could say the words before I said them. Yeah, no, you could. So what I teach applies to anything, but for me personally, while I do futures sometimes, I think stocks is where it's at because of the variety. And many of you know this, and you don't necessarily agree, or you've worked around it. But one of the big things is, to me, is the variety. When you have, and actually, this topic will come up a couple times this morning, I guess, really, but you have that variety because it's about finding patterns that you recognize. And the problem to me is if you're trading one entity, or in Forex you have six entities in front of you, or if you're trading just the market, you have one entity in front of you. If the setup isn't right, you have a tough choice to make, right? And that's to either take a compromised position or to wait. How long do you wait? Can you go 3 days without a trade or whatever it is? So I think it forces people to be not patient. Now, obviously not true. There's a lot of very successful futures traders, and Glenn, you do great. But I'm just saying that's a big negative. I'm a patient person, and I don't have the patience to do just futures. To me, what I like is I don't like that setup. Next one, next one. Boom, there's the one I want, and that's what stocks is to me. So that's why I like stocks. And what that also allows you to do is to not have to find the top or the bottom. If you're just a futures trader, or if you're going to trade your long-term account just using the market, you've got to find the top, right? There's no other way. True? I mean, if that's all you can do is trade the market, and you're long for years, and then you decide, okay, you know what, I don't want to lose money. This is the top. Oh, I want to short. This is the top. You have to make that decision. Well, the nice thing about stocks to me is you don't have to do that necessarily. You can find the highs and lows in individual stocks and try and coordinate that with the market timing. And that's what I think it's all about. It's about stock picking. And if you do it right, you can make money on stocks that you're short, even if market keeps going up a little bit. Now, if you're way off, it may not work. But if you start getting those weaker stocks first, they may not go up even if the market goes up. Does that make sense, everybody? And by the way, if you like that topic, it's explained more in one of the videos on the Free Stuff page called What Time Frames to Trade. Does that make sense, though? So the number one question I get all the time is, is this the top or bottom in the market? And it's not. There's sometimes, I know. I mean, in the past, I've had every top and bottom in the market. I mean, very accurately. A lot of you know me. I've done that. But this time has been trickier, because we've had unprecedented things going on. Everything from the COVID was a big interference to just an absolute unbelievable, concept of printing money that's going directly into the market. That, like I always say, when you're balancing supply and demand, it's hard to balance it when the demand becomes infinite, which is what it's been for a period of time. So it's trickier. But here's the key to me all the time is that I don't have to find the top of the market necessarily. I can find reasonable areas and then trade around it using stocks properly, as a matter of fact. So right now I actually have, remember, last year long-term trader did well, great. What I always said last year was it's not impressive that. What's impressive is I'm not going to lose money when the market drops. And people have been asking me, don't subscribe to it. Hey, are you making money with a long-term trader? So this year, right now, the QQQ is down 14.7% for the year from the high. And at one point it was down 22%. And right now, as of today, the long-term trader has been a little choppy. I'll admit it has been a little choppy, but up. You can see they're 10.4. And it has been back and forth, though. I mean, at one point I was, about 4 weeks ago, it was up 50%, and then 10 days later it was down. So, I mean, it's been back and forth. But the point I want to make out of that is that I currently have 3 short, 2 long positions. So there's a balance in there. I also want to point out something that people have relayed to me in emails is that, I consider like 6 to 8 to be kind of the max I would ever put in there. And I'm not necessarily talking about maybe if you have an IRA you can't touch or something like that, or you have company stock, but I mean just in terms of what you're getting in and out of on a, over the months. And I hear people that say they have 30, 40 positions, or they're following somebody. I know some people are following somebody that I know that has 40 positions open. I think that's kind of insane. I don't see the point in that, really. I mean, obviously you want to not put too much into any one stock that you can get hurt, but at some point you're just watering down everything. I mean, You can't have 40 great picks that you love, you know, and plus it makes it more difficult to maneuver around when you have to buy and sell so much at once. So anyways, that's my point of view. You may not agree, but you're here to hear my point of view at the moment. So, and I want to bring out two other things here on this. If you're long, and obviously there may be some things you're never going to get rid of, but if you're long and you're concerned and you're wondering what to do, I have a question for you. When we were down 20% at one point, and you hung on, where do you draw the line? That's kind of a real question. Where do you draw the line? I do this thing in class where I tell this story about this guy who lost his entire account and his thought process as you go through it. But you know, you're at the highs, and then the market takes a hit, and you're down 10%. And isn't it true that isn't it uncomfortable selling whenever you're not at the high? Isn't that true, everybody? Yeah, it's tough. And then you go down 10%, and you're like, wow, I'd really like to get that back, right? And then you're down 15%. And then you're down 20. And what starts happening is true or false, that every reason that made you think I didn't want to, you know, get rid of anything at 10%, it's all doubly, triply true at 20%, right? It's going to come back. I gave back too much money, right? And that's why you have to make decisions ahead of time on how you handle things. You can't wait and just react to what's going on. And the best thing you can do is to be, you know, is to obviously be out or short at the top and not wait for the pundits to tell you that, you know, we're down 20%. By the way, did you notice the new language change? I wrote about this a long time ago, but when we had 20% in the NASDAQ, did you notice the language change? Since I've been involved in the market, however many years, that was called a bear market. Did you notice the language change? This was now the pullback. No, what was it called? The correction. This is the correction. They changed the wording so as to make it sound, you know, more viable. Interesting. Well, that's good. That's the other side of it. Of course, when you say you can't handle looking at all those different things, you know, you boil it down to, the goal for me is to always boil it down to a handful of things. To me, the bigger the net starts at the top, the better the catch is down at the bottom. So if you factor in X number of things at the top, and then you sort through and pick your favorites, if you start out with 10 things to look at, there'll be a certain quality to the two favorites you pick. If you start out with 100 things at the top, there'll be better quality to the two favorites you pick. If you start out with 500 things, right? Follow everybody my thinking? And that's the way I've always looked at it. And to me, it doesn't take much time at all to go through and filter that down. So anyways, good comments though. You don't have 20 minutes, right? That's fine. That's why we're all different. That's why everybody has their own thing. I certainly see the advantages to wanting to focus just on the market. Yeah. Oh, hey, did you guys? You know, something I didn't get many comments on was, did you guys see? Who watched the video? There's a video put out there. This is an educational section. It was not on an event. It was a special video I did about getting out of a slump. Did anybody watch that? Any comments? You like it? Enjoy it? Thought I was wacky? While you're typing, Reg, the IWM is, you know, noticeably and unquestionably a lot weaker. And, you know, the adage that has some truth to it is that the IWM will kind of lead on the way down as, you know, the risky money comes out of the market first, so to speak. And it's a very bearish pattern on the weekly chart. Very tough to get over the high of the last 3 weeks, in my view. As a matter of fact, everything, you know, most everything about what I teach is designed to say, hey, here's the tools, and then, you know, you find your own unique sweet spot. It's not like we're all out doing the same thing all the time. I just like to make that point that in terms of what you're focusing on and what you're looking at, there's differences, and I just want to make everybody aware of the differences. That's all. Here's one for you. Here's my other quick little topic. Perfection. Great technical traders only trade perfect patterns. Good comment? Comment to live by? True? Like it? Thought-provoking? Well, it's a common cliche out there. I don't like that saying at all. for a couple different reasons. On one hand, you could say at its best, it's kind of like saying, well, to make money, buy low, sell high. It's just kind of a stupid comment. But at least buy low, sell high is actually, you know, even though it doesn't help you, it is some truth to it. I don't think there's even any truth to that, really. Not necessarily they're perfect, but sure, they have some parameters. Yeah. Well, and here's why. To me, there's two reasons. Number one, let's say we knew what perfect was. What do you do when perfect doesn't show up for you? And it kind of is that same point to me about if you're just trading the futures. You know, if you're waiting for that perfect setup, what if it doesn't happen all day, 2 days, 3 days, 4 days? But here's the other one to me, is that what is a perfect pattern? And that to me is what's kind of funny. I want to do this little thing for you. Yeah, well that was still from me. That's why I coined it. Not that it matters, but I did coin that term. But anyways, let's go back. I borrowed a few slides from another presentation real quick. Everybody pay attention real quick here. We all know that trading has some subjectivity to it, right? But when you say what's a perfect pattern, I don't care who you get together, or even in your own mind, I don't think you can define perfect, really. You can define things you like or not, but no matter where you are, do you guys agree there would always be a borderline to whether it meets that qualification or not, right? If you lined up a grain of sand from Florida to California, right, and somewhere along the way, if you said that's far enough, if I took one grain of sand away, you can't tell me to change your mind. Right? You know what I'm saying? At some point, what you consider to be a perfect pattern, if it degrades slightly, you may say it's still perfect. Degrades a little more, you may say it's not perfect. Where's that line, right? It's a very subjective thing. You all agree with that? There's no way in trading you can objectively define what perfect is. You can't. And I want to prove that to you in a way that's almost kind of shocking, right? Let's just have a quick little vote here on something. Bullish versus bearish, right? Left bar, most bullish bar, you would see a single candle, right? Right bar, most bearish bar, you would see a single red bar, right? Question for you. Which candle is more bullish? One or two? Humor me on this one. This is the easiest one you'll have. Which candle is more bullish? One or two? Okay. One. Why? Because it's green and it's big, right? All right. Let's go to the next one. Which one is more bullish? One or two? Yeah, two. I agree. Even though two is red, correct? Two is red, but yet we all agree it's more bullish, and that's an easy one too, right? Okay. How about this one now? One or two, which is more bullish? Two, 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 two. All right, stop. How about now, which is more bullish? One or two? Two, 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 two. Agree. How about now? That's an eye exam, sort of. Still number two. How about now? You see my evil plan. How about now? Oh, Don says he doesn't know. 50-50. So would you agree that somewhere in between, you know, this and this, somewhere in there, I could get you guys to split 50-50, right? So if you had to pick one or the other, right, there would be an exact millionth of an inch line that I could make that red bigger, the green bigger, whatever. What do you guys would split? So here you are, all presumably good traders in the room here, and you can't even agree. I could get you to split 50-50 on would a single bar is more bullish than the other, right? If you can't agree on which bar is more bullish, how can you agree on an entire pattern being perfect or not? You see my point? So there is no such thing as perfection. It's like a lot of you guys had the right comments, you know. At some point, then we get all the way down to the point. If I keep increasing, you get to the point where we started, where that's the most bullish bar in the world, right? So this is the comment I want you to remember, and plus all that, you know, really ignores what I call in a sense, the math of it and the entry and the management to a large degree, which are actually more important. The entry and the management are more important than the setup anyhow. So to focus on just what the perfect setup is meaningless. You know how many people I see all the time, how many people I get emailing me that have, let's say, picked a perfect pattern, but they lose money anyhow? So what good is focusing all your time and effort and just getting the perfect pattern idea, which maybe doesn't even exist, and then you lose money anyhow because the other aspects of trading you don't have your handles on, right? Here's what and this is where some of you were probably going with some of your comments to me. Great trading is how you handle the less than perfect patterns that are thrown at you every single day. That's what it's about, how you handle that. We're down to that 9:30 time where it's time for more questions. I don't think I had any questions I missed, did I, up here? Questions? There is no such thing as black box trading. As a matter of fact, I talk about that sometimes in events, and one time I had a guy ask me if he could call me, and he was the guy who actually was hired by, I think it was Goldman Sachs at the time, maybe a decade ago, 6, 7 years ago, to find, and he was in charge of developing their black box, which is what you're talking about. Computers just trading whatever. And he said that they kept the project alive and open because they didn't want to shut it down, but he said that they gave up on it. There was no real concept of that, happening for whatever reason. So naturally, there's things you can do. I mean, there are two things that people get confused with. I mean, number one, sure, you can have it to make a nominal return. There are ones out there that do that, but not like you would make day trading, or not like you would make with good picks on your own. And number two, the other issue with it is that, in a sense, the only way they get it to work to some degree is by constantly changing it. So I mean, if you're subscribing to a place who has the black box thing, they're changing it every day. And what's the difference between that and somebody just doing their own picks or whatever? So there's not like there is a formula that you can walk away with and go on an island and make money with. It's not something I'm ever going to worry about because it's the emotions in trading that make the market, that make the chart. That's what it always is. There is no perfection, Davis, like that thing says there. It's how you handle the less than perfect patterns that are thrown at you every day. Questions? You guys are light on questions here. I have a story I don't know if I want to tell. Nah, I'm not gonna tell it. It just has to do in general with no, never mind. I don't want to go down that road. This is your time, guys. Questions. Those are my fill-in topics there, and I'm done with my fill-in topics here. So let me know if you got any more. We're going to wind it up in about 5 minutes here. That's what my comment was. I have to deal with in perfection to succeed. Right. Yeah. Well, that's my whole point, Dave. Well, when you look at some of the sayings that I have, I mean, it really exemplifies that. And you've heard me say, I'm sure many times, that I'd rather have a great entry to a so-so setup than a great setup and a so-so entry, right? I mean, right there, that says a lot, right? I mean, you can make good money a lot of times with something less than perfect, and this kind of gets back to the whole moment in time thing. That's one of the sayings I use to explain the whole moment in time thing. So, if you take a trade short and it turns out to be the best long of the day, was that a stupid trade? Were you wrong? Did you lose extra money for being extra wrong? And the answer is no. There are some patterns that are kind of either way. There are some patterns that, maybe would go higher, but if they were to drop, they'd have a really big drop at that moment, you feel. So there's a whole lot involved in the whole thing. And the bottom line is making money. That's the whole bottom line. I got detained and missed part of the meeting. Yes, these Saturday events are posted. It'll be out, later in the week probably. Yeah, and they end up on YouTube and on the DTS free stuff page, so you can find them there. Okay. Do you have any emotions when in trades, or are you immune? Is it like instrument flying? It is largely immune. I mean, obviously you have some happy or sadness when you do good or bad, but if you're still, I joke around about number 2 pencils, but if you're still throwing the mouse across the room or high-fiving the air on good or bad trades, yeah, I think that's a bad thing because when you start to realize is that there's just a pattern. You're going to have winning trades, losing trades, and boom, So to me, when I have a losing trade, it's kind of like, well, okay, I have a winning trade coming up real soon, and vice versa. So you never get that all excited about it. I think it's great sometimes when you have one out of the usual. You walk away and you come back, and you have a 5-hour trade when you walked away or something like that. I mean, those are always fun, but I don't, we're human. I don't think the emotion ever leaves you totally, but yeah, it should not be a part of your everyday trading anymore. That's correct. Sector rotation, yes. I do for two reasons, Larry. For number one, you know, as I talk about even in the introduction class, big money follows in sectors. So typically you can find patterns for swing intermediate term trading by following the money going into sectors, because big money doesn't go into individual stocks per se, it goes into sectors as a group, and they can't turn around that quick, so generally you have good luck doing that. Number two, it can be, if you look at them closely, it can be a good indication of when market tops or bottoms are forming sometimes, because in pure sector rotation, the second something comes out of one sector, you see the sector it's going into, it goes into there and it stays there, and that sector starts going up. What you want to be careful of, and you see sometimes, is that when money comes out of one sector, it goes into the weak sector. The sector pops for a day, and then that immediately gets sold. That's where it gets to be a problem. When you look around and you don't see the weak sector really getting the money, sticking with it, and you see that sometimes. So it's useful in two different ways, yeah. So it's just with time and experience and emotional faith. Yeah, it's time, experience, confidence, and I guess just having that track record behind you, that you have a track record. In other words, if you think of it this way, Robert, if instead of trading, if somebody let you go somewhere and roll a dice, a pair of die, and you got paid $100 every time they landed 1 through 7, and you had to pay $100 every time they landed 8 through 12, you'd be winning 7 out of 12 times, right? And you'd sit there all day long, and you would not be very emotional, correct, Robert? Because you would know at the end of the day, pretty much exactly what the odds were, right? So as a more established trader, you start to feel that way. You start to say, okay, I know what I do, and I know the trades I take, and I'm going to have some losers in there, but yes, I'm going to end up winning, and blah, blah, blah. So it gets a little more boring. If you had absolutely no idea what you were doing, and every day the results are all over the place, then you're very emotional about it, right? Because you're not sure what's going to happen. Okay? Does that help, Robert? I think that's maybe the best answer I can give you. How do you handle a situation where you have a disastrous loss? Do you just exit everything and step back? Do you stop trading for a period of time? Do you come back? Well, when you say a disastrous loss, Gary, I mean that's. Let me scroll down here beneath this large question so I can see you talk. Are you saying it's a disastrous loss because you goofed up, you made mistakes, and you let something become a loss, or was it unavoidable because something gapped down $1 million? Because there's a big difference. Well, if it's your fault, that's a different situation. I mean, there are lots of mistakes that you can make that just cause normal losses that you have to evaluate and decide. Did you see the video I just put out about getting over a slump, Gary? No, it's not from today. It's on the free stuff page. I recently put out a video in the educational section. It's not an event, about getting over a slump, and you want to see that, because some of the things I'm going to talk about are in there in general. That if you in general are making mistakes, see, you're in one of two categories. Either you're new and you're learning, you're working your way up, and then you should be on a program of what you're doing. You should be on a program that says, I started with, paper trading, and now I'm risking small and smaller, and then I start increasing my risk upon success. $5, 10, 50, 100, 1,000, whatever you're at. And when you're on that, you're following that plan. So there's nothing to talk about. Once you become and you've arrived at your maximum risk amount, then you're in a little bit of a different category. Then you still have to watch what you do. But part of the point of that video was you don't just stop what you're doing because you have a couple losing days or whatever, because they're going to be thrown in there. You just don't do that. But there's a different category. When you purely just made a error by not taking a stop, or an emotional error like that, that's something you got to stop and reevaluate what you're doing. because if you keep doing that, you're going to be out of business. So that's a whole different category. It's one thing to say, I made a mistake in that I took a trade that was a little bit out of my plan. I didn't sell at the target I was supposed to. There's lots of things that we characterize as mistakes that are part of our normal trading that we try and eliminate. But then there's, I used to call this the good, the bad, and the ugly when you evaluated your trades. And, you want to go through and fix those bad mistakes. But when you have an ugly mistake, you got to stop and regroup, because if you're not taking stops, or which is what I have to assume the problem was, took something extremely risky or just way more share size than you're supposed to, you got to go back and figure out why you're doing that, because that's not going to stop on its own. All right. So if it's just an accident, or if it's unavoidable, you just keep trading. But if it's something that you are having emotional issues over, you got to fix it. Okay, I don't see a question there, Rich. So I really could care less what anyone else in the world has to say about the market or anything else. And I don't say that being cocky. I just really, there's nobody's opinion in the world I would care about at all. And you also have to be careful, because 90% of the people that are talking to you are talking with ulterior motives anyhow. So not about stops, about gap again. Oh, okay. Well, all right, Gary, if it's a gap against you, assuming you did nothing wrong. Now, again, you may have done something wrong, though. If you got into a crazy stock, if you got in before earnings, if you did something that should have been avoided, when you look back here and you said, yeah, I took a chance on that one, well, that's something you have to address. But if it's just something you just got into the most boring stock in the world, and the next day they, announced that the company president's quitting or something, and it gapped down or whatever it did, there's nothing you can do about that. So you just go on. So what's the question, Reg? That we'll be in a bull market forever and the market's safe and you always keep your money in there because it's a U.S. market? No, I don't agree with that at all. It's a stupid comment. And whoever said it is stupid. Well, you typed a long statement out there that's a copy and paste from somewhere. I don't see a question in there. It's like I said a minute ago. If you have profits that you are looking to protect, you have to treat every short-term top in this area as a possible long-term top. Because once you're down 20% and you decide you're hanging on, then you're down 30%, you decide you're hanging on, then you're down 50% and you decide there's no way you can get out now, and then you get out when you're down 80%, and that's what happened twice in the last 20 years. But you all have to make your own decisions, like Stephen typed on the screen. You're all individuals, and you all have to think for yourself. I'm just here to try and provide some insight in how I look at things and how I do things, and also keeping in mind that most people don't handle it right. All right, last call for questions. It's 10 to 10. That's about our time limit here. We will see you guys Wednesday. You'll get your invites for Moment in Time Part 2. Have a great weekend, everybody. See you Monday if you're in the trading room.